Hi everyone, welcome to the show. This is Jerome Powell, November 29th, 2021.
Technological change and innovation over the last decade has led some to argue that we're on the brink of a fourth industrial revolution, a digital revolution. Certainly, rapid innovation, including through the application of advanced digital technologies, machine learning, artificial intelligence, and big data, is revolutionizing the financial sector. The Federal Reserve has a mandate to understand and, in some cases, manage these changes. But it also has a responsibility to be at the forefront of change to deliver to the American people and the international community a reliable, efficient, and inclusive monetary and financial system. Furthering the efforts around the Federal Reserve System to harness the power of innovation, I'm delighted to welcome the opening of the New York Innovation Center. Located at the Federal Reserve Bank of New York, in the heart of the most important financial center in the world, this Innovation Center will draw on the expertise at the bank, in the Federal Reserve System, and from the broader financial community, as well as experts around the world to analyze and bring technology to bear on improving the global financial system. Increasing the synergies of the New York Innovation Center will be its strategic partnership with the BIS Innovation Hub, recently established to foster dialogue, collaboration, and knowledge sharing among central banks and other authorities and institutions. In particular, the partnership will support our analysis of digital currencies, including central bank digital currencies, help to improve our current payment system, with a particular focus on making cross-border payments faster and less expensive, and it will provide new tools to aid our supervision of the financial system. Linking up with the BIS in this way will enhance our ability to collaborate with central banks around the world and will ensure that the best and most up-to-date information, research, and practices are flowing freely.
So we're moving to the fourth industrial revolution. The central bankers are moving forward, and Jerome Powell is saying that the Fed is joining the BIS Innovation Hub, where the Bank of International Settlements tests central bank digital currencies and other technologies. So this is Navin Gupta. He's from Ripple, and listen to what he has to say.
Today you invoice your clients on a 30-day payment term. So she's selling, say, for example, goods on the internet, and her clients pay her in 30 days, right? And by the time you actually receive the payment is 33 days. That means you need 3 days of extra working capital because you're waiting for money to essentially come to you. Now, let's assume she invoices on 30-day terms and she gets the money on 30 days. That means you need 3 days less of working capital. If you look on a yearly basis, you need 36 less days of working capital, right? If you add these 36 days within your balance sheet, you get 10% extra sales because you now don't need to account for this particular capital. So how many central bankers will give their right arm to get 10% more growth within their economy without doing anything? Right? And that's the reason this will succeed. This will succeed at an individual level, at a personal level, it'll succeed at a corporate level, and it'll succeed at the GDP or the economy level. Because through the velocity of money, you will be able to get greater output and you will be able to get greater growth. And that's the reason.
So technology is the reason for the economy to become more efficient, 10% boost in GDP, and this is why central bankers are willing to give their left arm just to use digital currencies. So this is iTrustCapital/Darren. This is my link if you are interested in investing in a crypto IRA. Well, there's tax incentives. Please check out iTrustCapital/Darren. This is a video that they did, top 5 reasons to open a crypto IRA. There's tax benefits, cold storage. They have institutional storage for your crypto with Coinbase custody, as well as low fees. They recently got rid of their monthly fee, and there's a ton of choices. You get to pick a lot of diverse amount of cryptocurrencies. So check out iTrustCapital. So this is Donna Riedel from Fordham Law.
That China did all of us a favor by banning crypto, and when they did that for their own self-interest, which is their central bank digital currency, which will not have the privacy mechanisms that crypto people can enjoy, though it's not completely anonymous, and people have misconceptions about that. I do think very, very, very important in crypto is there's a geopolitical race going on. And I think that crypto, the countries that adopt it and let it flourish, and not in a fearful way, will be the ones that will have the most amount of not only innovation, but it will foster democracy. It will foster self-expression. It will foster savings, and it will bring about many new things that and improve upon some of the worst of the internet, in terms of privacy, in terms of various things that people saw and didn't understand immediately with respect to some of the social media. So I do think that there are very, very important societal issues here. And I know governments want to control money supply and stuff like that, and that's important as well. But I do think that this is for people that are not as wealthy, for people that care about these freedoms. That this is a very important development, and we shouldn't lose sight of that when we're squabbling over whether it's a security or commodity or should be under the Treasury.
So the benefits that this technology offers, right, as Naveen said, that it's going to boost GDP by 10%. So this is massive for a country's economy. So China banning cryptocurrency puts everybody else at an advantage, where the race is on, where nations are going to contribute and try to develop these platforms, these blockchain-based platforms, cryptocurrencies, because ultimately that'll just help the economy. And right now we're in this inflationary environment, but technology is deflationary, right? If I can get more out of my dollars through the efficiencies of technology, that'll counteract some of the inflation that we're having. So at the same time, it's boosting GDP and it's deflationary. So this is a good thing, and the race is on. So this is Future of Finance, what CSDs can do about the tokenizations of security markets. And the first person that's going to speak is Nadine Shakar.
Do you think utilities still have a part to play in transforming this industry? Only if they transform themselves. And I'm starting to get worried about their positioning, to be honest. I mean, you look at SWIFT, you look at CLS, you look at DCC, Euroclear, all the utilities we've grown up with. I think they need to start to articulate their future position. This ship is about to leave the docks here, and they need to jump on board. So yes, of course, if they do enable our transformation, we will wholeheartedly embrace them, but we can't let them slow us down either. So next slide, please, Viviana. Only if they transform themselves. And I'm starting to get worried about their positioning, to be honest. I mean, you look at SWIFT, you look at CLS, you look at DCC, Euroclear, all the utilities we've grown up with. I think they need to start to articulate their future position. This ship is about to leave the docks here, and they need to jump on board. So yes, of course, if they do enable our transformation, we will wholeheartedly embrace them, but we can't let them slow us down either. I won't make you listen to that again. But there you have it, from Nadine Shakar, Head of Digital Services at one of the biggest global custodian banks in the world. Transform yourselves, articulate your position, or risk being left behind.
All right, so the incumbents, the boat's leaving the dock, and the incumbents are left behind right now. So they need to hurry up. DTCC, CLS, Euroclear, SWIFT. These institutions are not keeping up with the pace, and this is a person speaking at one of the largest custodian banks in the entire world saying, they have to pick up the speed or the boat's going to leave the dock. So I found that very interesting. This is Jack McDonald from PolySign.
Providers, asset servicing firms, and the time is now to be investing in the space. So I think it's an opportunity that could become a threat if CSDs worldwide, ignore the transformation.
We've got an interesting question from Claudio Calderon here, which I'll ask in a minute. But just, Jack, could I just pick up the point you make about the institutions, the buy side, if you like, driving the pace of adoption here? I was thinking about this. Some of those figures I gave in one of those slides about the size of the equity and bond markets. You've got 120 trillion in the global bond markets, 105 trillion in the equity markets, and 327 trillion in commercial real estate. So these institutions don't have to, increase their allocation much to tokenized assets before you get quite a significant change going on. 1 or 2% would make a big market.
Yeah, it's a absolutely monster TAM, or total addressable market. And I think what it really speaks to from both the buy and the sell side, but let's talk about the buy side for a moment, is ultimately when you think about the opportunity that DLT and digital assets represent, it's really about bringing greater liquidity and transparency to a universe of asset classes, broadly speaking. And if you can ease the friction that exists today for many asset classes, you invite a whole new segment of investors, namely individual retail investors. It really speaks to the democratization of finance. And I think the buy side is looking at that. As everyone's industry is getting more competitive, this really opens up a potential floodgate of new investors if it can be done in a thoughtful way. The other thing I would add is, thinking back to the conversation thus far this morning, I'd ask everyone to keep in the back of your mind this notion that DLT and blockchains really replace trust with truth. And the question is how institutions, buy or sell side, can migrate to that sort of ethos. I still think that institutions operate on a series of trust, and to really move a paradigm of the global capital markets to a completely trustless framework is a really big leap to take right now. So going back to the question, we can talk more about this. I think CSDs potentially could play a really vital role as a trusted independent counterparty there. I think there's just the opportunity for them to evolve the underpinnings of technology they embrace, et cetera, because ultimately the buy and sell side still operate on a framework that's premised on trust.
So what you're really saying is that no matter how quickly institutions start to allocate assets to tokens, they're still going to want that paraphernalia of CSDs and fund administrators and custodian banks. Now, somebody is going to make them whole if something goes missing. They're going to need that for some time to come. So they're not going to be able to enjoy all the cost benefits immediately.
At least in the interim, right? I think it will be a transitional or evolutionary thing. The individual retail segment can look at the whole DeFi movement, which is a peer-to-peer network, essentially, where I do not need a trusted counterparty or an untrusted counterparty to sit in the middle between you and me lending you fiat, you lending me crypto, or whatever it is. I think the retail segment of the investor universe is there, or going there more quickly. It stands to reason that institutions are going to be behind it. So I think there will be this multi-year evolution. I'm not sure whether or not 10 years from now, Fidelity or the Capital Group, or fill in a large asset manager is trading with another without any counterparty in between. I don't have the ability to think that far out with any degree of certainty, but it's heading in that direction.
Well, at my age.
So we're getting to a point where he discussed the total market caps of some of these areas that'll come into crypto, right? So he said real estate, like over $300 trillion, right? We're only at a $2.7 trillion market cap in crypto. So when this money starts flowing into crypto, the upside is enormous. And Jack saying, this is probably not going to go right to a decentralized system where there's no trust involved, right? A trustless system. It's not all going there. It's going to come in stages. So he's saying, in 10 years, maybe we'll get to a point where everything's trustless, right? So he doesn't know the exact time frame, but we know the trend, where it's headed, right? And the amount of money that's capable of coming into the crypto markets. There's going to be regulations. There's going to be a lot of things that need to be ironed out before all of that wealth shifts in. But as Nadine said earlier, the ships are leaving the station. We're moving forward with all of this. So, very exciting. And this is Envoy. Envoy, I found their white paper when I was doing a search for Ripple. And this says, additionally, chain integrations are in development, initially to include Stellar and Ripple. And Envoy is a trade platform, right? And they're trying to do green energy and sustainable green trust and trade. So they're having a pre-sale that I can't participate in because I'm a U.S. investor, right? But it's a $20 trillion market that they're going after. And what I found interesting is in their roadmap down here, it says major bank interest for R3 Pilot and Enterprise in Q2 2021. And then it says 2021 Q4 payment network testing, onboard first client, 300 partners to follow. And they have some pretty big partnerships. They're supported by Stellar, Carbon Chain, Ethereum, Corda, KYC Chain, IBM R3 TradeLens. And TradeLens is using Interledger Protocol for their trade platform. So this seems like it could potentially be something. It's if these 300 partners actually come onto the network, this sounds very promising. So I'll be keeping an eye on Envoy DeFi. Now this is a insightofIndia.com PDF, and it states that some of the other recommendations of other committees included development of an alternative indigenous financial system for cross-border payments on the line of Ripple, U.S., and Instex, European Union. So they're talking about this regulation that happened in India, and their recommendation was specifically to mention Ripple and Instex to keep in mind for this regulation that we should be thoughtful for cross-border payments, Ripple and Instex. So I found that interesting. Now this is Ben Emmons, and he's going to talk about Bitcoin.
I think Tesla was the other. That being said, I wanted to, you've sent out notes on crypto, on Bitcoin. It was interesting, it was in bear market territory on Friday, 20% off its recent highs. Now it's been creeping higher, and it's getting closer to 60,000. What are your thoughts on Bitcoin, the futures that we've been seeing, the ETFs that we've been seeing, investing in Bitcoin and crypto overall?
It was very interesting to hear Powell say yesterday that the Fed is finally going to publish that paper about the digital currency, because that, I think, is really key. If the Fed has an opinion about the central bank digital currency, digital dollar, that sets up even more for adoption of crypto globally, or in investment portfolios, if you will, because this year has shown larger participation or increased participation by institutional investors adopting it as an actual asset class to diversify holdings, and yet you're getting a lot of chop in between on that, because it is still a different kind of asset class than stocks and bonds. So I think that is the next stage here. So I'm quite bullish actually on crypto and Bitcoin in general, that this is not the high 60 or about. Now it may be 100 or more. There's just a lot of scope for upside, because the digital currency is the real key part about that process. And then secondly, I think we do get a top regulator in the United States for crypto, whether it's the SEC or any of these other agencies. That will make a huge difference too, because that, I think, pulls in a lot of still sidelined institutional investors that are seeking alternatives in the portfolio that they normally haven't done so. So there's another force of money coming into the crypto space in the future. So it makes me quite bullish on crypto.
Right.
So Ben Emmons is quite bullish because he knows the Fed's going to start introducing central bank digital currencies, the Fed dollar, and he's also saying regulations are coming. So there's a lot of sidelined money right now just waiting for these regulations, making sure they can invest without losing their capital. So Ben Emmons is a macro strategy at Medley Global Advisors. He was previously the chief economist, and he was the global portfolio management group at PIMCO. So he has a pretty impressive resume. And Medley Global Advisors, they work for G20 countries, emerging markets, and they, for hedge funds, institutional investors, and asset managers. So I hope everyone enjoyed the show. If you have any comments or questions, please leave them down below. Please remember to hit the like button and subscribe button. Thanks, everyone. Have a good one.